Okay, so let's start problem 3 now. RK Industries, RK Industries purchased machinery from A Limited on hire purchase basis on 1st January 1993. So from here we get certain details. RK Industries becomes the hire purchaser, A Limited becomes the hire vendor. And the date of purchase is 1st January 1993. The vendors agreed to carry out the maintenance of machinery at a fixed charge. Now there's something a little extra here. The vendors agreed to carry out the maintenance of the machinery. That means they promised that they would carry out the maintenance of the machinery, regular maintenance or yearly maintenance, whatever it is, at a fixed charge. That is, fixed charge has to be borne by the hire vendor. They are not going to do the maintenance free of cost. That's what it means. They're not going to do the maintenance free of cost. They're doing it at a fixed charge. Payment was made in 4 quarterly installments. Now this is very important. Payment was made in 4 quarterly installments as under. Now what are they saying? 4 quarterly means what? What do you mean by quarter? If you try to divide the year into 4 parts. Okay, when you talk about quarters, it's basically you're trying to divide something into 4 parts. So if you try to divide the year into 4 parts, or you say quarters, 4 quarters, you get 3 months each. So here we don't have annual installments. The installment is paid after every quarter. And what I mean by every quarter, after every 3 months. So this is slightly different from the previous problem. So these are the differences that you're going to get in every problem. Okay, the small differences. So just try to understand the question well. If you can understand the question well and interpret it correctly, I don't think there should be difficulties. So payment was made in 4 quarterly installments. 4 quarterly is the entire payment was made in 4 quarterly installments. The first installment of rupees 10,000 was paid on 31st March 1993. Okay, now this is very important. The first installment of rupees 10,000 was paid on 31st March 1993. Interest at 12% per annum and maintenance charges at rupees 2,000 per annum were paid extra. What does this mean? Besides 10,000, they paid 12,000% interest and also 2,000 towards maintenance charges, but 2,000 per annum. Okay. Each subsequent quarterly installment exceeded its preceding installment by rupees 5,000. Each subsequent quarterly. So the first installment was 10,000. They're saying the first installment was 10,000. Each subsequent quarterly installment exceeded its preceding installment by rupees 5,000. So if the first, we have 4 installments. If the first is 10,000, the second will be how much? Can anyone tell me? If the first is 10,000, the second will be how much? Quick. Each subsequent quarterly installment, somebody said something? Each subsequent quarterly installment exceeded its preceding installment. Preceding means the previous one. Each subsequent is the next one. Subsequent means next one. Yes, good. So, if the first one is 10, the next one becomes 15. The third one will become 20. The third one will become 20. 15 plus 5, 20. And the fourth one will become 20 plus 5, 25. So, every time you pay the installment, you have to pay 5,000 extra. That's what it means. Okay. RK Industries charge depreciation at 20% per annum on the diminishing balance method or the written down value method. Prepare necessary accounts in the books of RK Industries and balance sheet on 31st December 93. Again, no journal entries, just the ledger accounts. Now, there's something very important that that's missing, and we cannot start this analysis of payment until and unless we have that. Can somebody tell me what is that? These are the ways you need to read the problem and look what is missing or look what is not given. What is the, how you're going to proceed with it. Okay, now down payment is true, down payment is not there. But what happens is sometimes in certain contracts there may not be down payment. There may not be any down payment. So even if down payment is not there, you can start the problem. Okay, and this it is true in this problem there is no down payment, but even if down payment is not there, we can it's not a problem, but there's something else more important that is missing, without which we cannot start the problem at all. Very good, Nisha. It's a cash price. It is the cash price which is not directly given to you. In the first and the second problem, they have clearly said that the cash price is so and so rupees. Okay, this problem the cash price is not given, and we can't start this. We can't put anything here in this cell until and unless we know the cash price. But there is an indirect way of finding out the cash price. Think and tell me. I want you all to think. I know I'm wasting time asking this question, but it's very important that you all think and just not look at what I'm doing. There is an indirect way of finding out the cash price. I want it to come from you. Read the first one. They've said the first installment of rupees 10,000 was paid on 31st March 1993. Interest at 12% per annum and maintenance charge at rupees 2,000 per annum were paid extra. So this 10,000, should it figure in this column or should it figure in the installment column? That's my first question to you. This 10,000, should it figure in cash price paid or should it figure in the installment column? Quick, quick, quick. Even if it's wrong, it's okay. But I want you to think. Should this 10,000 figure in the cash price paid or the installment column? Okay. One is saying installment, one is saying cash price paid. Aarti, listen. Okay, Rishvesh also. The first installment of rupees 10,000 was paid on 31st March 93. Interest and maintenance charge were paid extra. That means this 10,000 is not the installment. Besides the 10,000, you're also paying the interest and maintenance charge. Please remember, installment is the final amount. Your cash price plus your interest plus any other extra charges that are paid, all that put together becomes your installment. Like we just did in the second problem. Okay, like we just did in the second problem. So all that put together becomes your installment. So basically this 10,000 is going to feature in this column. And what it's the installment will be this column plus this column plus this column. Okay, so now that is settled that 10,000 is going to feature in this problem. Is there a way of finding out the total cash price? Can anyone tell me also what will be the total cash price? Can anyone tell me what will be the total cash price? Quick, quick. Can anyone attempt to tell me what will be the total cash price? 8,000. How did you get 8,000, Amia? How can a cash price be 8,000 when the first installment itself was no? Audrey, no. It's much more than that. Okay. Now we have said the first installment is 10,000. Okay. The first installment, and this is just the cash price because interest and maintenance charge is going extra. No, it's still not 40. You'll have to still add more to it. So what we are going to do is, what do we know is, okay, the first installment is 10,000. What's the next one? What's the next one after 10,000? Put on your, some of you can turn on your mics, please. What's the next one after 10,000? Quick, yes, 15,000. And what will be the next one after 15,000? Next one after 15,000 will be, I'm adding plus 5. And the last one, they've said 4. Yes, the last one is 25,000. So basically the total of this is, yes, finally 70,000. Now how I could have done this, if they had told me that the final installment is 10,000 which is inclusive of interest and maintenance charge, I could not have been able to find out the cash price. Then we would have had to follow a different way of doing it. Okay. Now why did I do this? Because they've said that 10,000 is exclusive. Yes, I will repeat. They have said 10,000 is exclusive. It does not include the interest and maintenance charge. So that means we know that 10,000 is purely the cash price. 10,000 is purely the cash price. And what else they have told us? Okay. They've said, how do I know that I have to calculate it this way? They've said 10,000 is not inclusive of interest and maintenance charge. Interest and maintenance charge has to be paid extra. That is besides 10,000. Okay, so that means 10,000 is purely only the cash price. 10,000 is only the cash price. Okay, and How do we know what are the subsequent? So the first installment is 10,000. The second one they've said is exceeds the previous one by 5,000. So it becomes 10 plus 5, 15. The next one will exceed by another 5,000. So 15 plus 5 becomes 20. And the last one, since it's 4, how do I know it's 4? They've said 4 quarterly installments. The fourth one is 20 plus 5 becomes 25. The total of this gives me 70. The total of this gives me 70. Okay. Always remember your installment is the cash price plus interest plus any, in case there are any additional charges paid, that also has to be added, and your installment that you finally pay will be a sum total of all those things. Is that clear? So we couldn't start the problem until and unless the cash price was given. Why we did not add interest and maintenance? Because we want to find out the cash price. If we add interest and maintenance, we'll get the total installment. That we are going to do when we are doing the analysis of payment. We are going to add interest and maintenance charge to each of these. Because interest is calculated on each of these. Why are we doing this calculation? To know how to start, to know have a figure here to start. Because if we don't have this figure, we cannot start. Okay, so now through this calculation, we have got the cash price. Okay, so let's start. Now, when is the agreement signed? Now, there is no down payment. There is no down payment. Directly, the first installment happens. Okay, now, normally we would have started on 1st January 93. Say normally we would have started on 1st January 93. Now you tell me, is there anything happening on 1st January 93? When I say anything happening in terms of any payments happening on 1st January 93? Is there anything happening on 1st January? Let's read the problem again. RK Industries purchased machinery from A Limited on hire purchase basis. The vendors agreed to carry out maintenance. Payments were made in 4 quarterly installments. The first installment was paid on 31st March 1993. So is there anything happening on 1st January? There is no down payment. Normally what happens at the beginning? Yes, only signing of agreement, but we don't write anything with regard to signing of agreement here. Okay, what we show is only the payments made. Though the signing of agreement is happening, but there is no down payment happening along with it. So we can't show anything on 1st January 93. Okay, we can't show anything on 1st January 93. So our first date where some kind of payment is happening is which day? Is 31st March. Is 31st March. March. Okay. Now, opening balance of cash price, we have already found out the cash price, 70,000. Okay. Cash price paid. How much is paid on 31st March 1993? 10,000. 10,000 has been paid. Now, how do we calculate the interest? How are we going to calculate the interest? Somebody just don't type it out, just say it. How are we going to calculate the interest? On which amount? On which amount will the interest be calculated? Quick. Yes, so 70,000, cash price is 70,000. What is the rate of interest? They have said interest at 12% per annum. Now please be careful, 12% per annum. What are we calculating after? What are we calculating the interest for? No. Okay, that's one thing. Audrey, we normally don't make it 3%. I know you have taken it as 3%. What we do is, the right way of showing it is, you multiply it by the period. Though, since 12% is for the full year, we are concerned with how many months? We are concerned with how many months? We are concerned with how many months? 31st, yes, 3 months. Why? Because we bought the machine on 1st January. Right now, we are paying our first installment after 3 months. So, basically, we have used it only for 3 months. So, we are paying interest only for 3 months. Now, if they had said at 12% per quarter, then you would not have had to do anything because the 12% is for the quarter. The entire 12% interest is for the quarter. Right now, we can't charge 12% for the quarter because 12% is per annum. That's why we do multiply by 3 divide by 12. 3 divide by 12. And how much will that be? 70,000 into 12% into 3 divided by 12 gives me 2,100. Okay, so that's the first thing. Now, before going to the installment, now this maintenance charges was not there. How would we have got our installment? It would have been 10,000 plus 2,100. But we also have our maintenance charges. Now, how are we going to calculate maintenance charges? What have they said with regard to maintenance charges? And maintenance charges of rupees 2,000 per annum were paid extra. 2,000 for the whole year. Right now we are paying an installment for the quarter. How much will it be for the quarter? How much will it be for the quarter? Very good. How did you get 500? Take 2,000 and divide it. It has to be spread over 4 quarters. So you take 2,000 and divide it by 4. 2,000 divide by 2,000 divide by 4. You will get, how much will it be? 500. 2,000 divided by 4 will be 500. Okay. Every quarter it will be the same thing. It's 2,000 per annum. Be careful. If that said 2,000 per quarter or 2,000 for 3 months, I would have taken the entire 2,000. But they've said per annum, so I can't take 2,000. Okay. And now, how do we calculate our installment? It's a total of all these three. So it will be 12,000, 10,000 plus 2,100 plus 500, which is going to give me 12,600. And how we are going to get the closing balance? This always remains the same. Opening balance minus how much you have paid, so that comes to 60,000. Next question. Can I calculate depreciation right now? Can I calculate depreciation right now? Do I calculate depreciation or no? Okay, one is saying yes, one is saying no. When is depreciation calculated? Depreciation is always calculated towards the end of the year. Okay, now why are we doing this interest and all? Because yes, very good, towards the end, but we have not reached the end. Okay, they've told us prepare necessary accounts and balance sheet as on 31st December. So basically your year end is 31st December 1990. So you're not going to calculate depreciation for every quarter. You don't have to do it because depreciation is calculated one time at the end of the year. So there's not going to be any depreciation. Okay. So we come back. Yes, very good. Only when you are doing the last installment. Yes, that because the last installment is going to happen at the end of the year. So 31st one installment is done. When will be the next? 31st March 1993. So we have finished January, February, March. When will be the next? Quick, quick. January, February, March is over. Next will be April, May and June. So it's going to be 30th June, 30th June 1990. Opening balance is 60,000. How much is our second one? First one was 10,000. The second one is 15,000. I hope this is understood. Okay. I hope this is understood. Each one exceeds the previous one by 5,000. How are we going to calculate our interest? It's going to be, copy the same thing here, just to get the formatting. So it's going to be 60,000 into 12%, again 3 by 12, because now right now you paid interest up till March. Now you have to pay from April, May, June. So these 3 months are April, May and June. 60,000 into 12% into 3 months gives me 1,800. Okay. This will remain same, 500, because it's 2,000 divided over 4 installments. So 500 per installment. This will be 15,000 plus 1,800 plus 500, which is going to be 17,300. And closing balance will be 60 minus 15, which is 45. Again, we have still not reached the end of the year. So we are not going to have depreciation. So depreciation will also be nil. Okay. Come down to the next one. So we have reached June. So we have finished 2 quarters. We have finished 2 installments already. The next one will be July, August, September, 3 months. So 30th September 1993, 45,000. We have already calculated. First was 10, next was 15, then we have 20. I'll just copy this just for the purpose of formatting. Okay. So here we are going to calculate on 45,000. Opening balance is 45,000. Again, which 3 months am I talking about? It is, we have done till June. We have paid interest till June. So it's July, August and September. July, August and September. So maintenance charge remains the same. This will be 20,000 plus 1,800 plus 500. Sorry, I didn't change the interest. The interest amount is 1350. Sorry, 45,000 into 12% into 3 by 12 gives 1350. Total here will be 21,850. Closing balance will be 45 minus 20. You will get 25. Still, we don't calculate any depreciation because we have still not reached the end of the year. Okay. So we come to the last one now. We have reached September. So what's left? October, November, December. So 31st December 1993. How much is it? 25,000. Now if you see, it's balancing. Okay, you don't even have to calculate, and we need this in the last one has to always be equal. Please remember this. This in the last one, whether it was the first problem, second problem, in the last, when you're paying the last installment, this always has to be equal because here we want nil because it's the last one. Okay, and see if it is balancing. So 25,000. So how we are going to calculate the interest? Again, 25,000 into 12% into 3 by 12. Which 3 months I'm talking about? We have paid till September. So October, November, December. So 25% into 12 months into 12% into 3 months is 750. This is 500. 25,000, 26,000, 250. This minus this is nil. Now, what do we have to do here? What do we have to do here? What do we have to do here? Quick. We have reached the end of the year. Yes, depreciation. Depreciation always on the cash price. Always on the cash price. So it's going to be 70,000 into what's the rate of depreciation? Rate of depreciation 20%. Okay, 20% on the diminishing balance method. Now here I won't be able to show you actually how the diminishing balance method makes a difference because we are calculating depreciation just once, just for 1 year. We are preparing account just for 1 year. Okay, so basically I won't be able to show you, but there will be other problems where we have from year to year, and I will be using the diminishing balance method and to calculate the depreciation. And 20%. So 20% per annum depreciation for the whole year. So if anyone wants, you can multiply 12 by 12, and 12 by 12 is 1. So you don't have to actually do it. Okay, so 70,000 into 14 into 20% give me 14,000. Okay, so just total these things. The total of the cash price here is 70,000 The interest is, total of interest is 6,000. Maintenance charge we already know total is 2,000, and finally 76 plus 2, the higher purchase price becomes 78,000. Any questions? Anything that you want me to repeat? That's what is there in this problem is there's a lot of logic that's involved. Okay, there's a lot of logic. So don't learn things by heart. Don't try to say, we have to do this, 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 and the problem is done. No. Check how the problem is framed. Sometimes the interest is included, sometimes it said paid extra. It's without interest. So these are things you need to be very careful of. Okay, if these things are taken into consideration, I don't think anything else is difficult, because posting it here is not difficult. Posting it here is not difficult at all. Clear? Any questions, or can I start posting? Can I start posting, or any questions? Okay. So we are asked to prepare the ledger accounts in the books of, prepare necessary accounts in the books of RK Industries. And who's RK Industries here? RK Industries is the hire purchaser. So in the books of RK Industries, the first account is always the asset account, and here the asset is machinery, purchase machinery. Okay, so I'll just write machinery account. So after the asset account, the next account is the hire vendors account. Who's the hire vendor? Purchase from A Limited. So A Limited is the hire vendor. A Limited account, and then we have the interest. We have the interest account. And they've also asked for the balance sheet. Okay. Another account that I'm just going to show is, I'm also just going to show the maintenance charges account. Okay, just like that. It's just like your interest account. Just because we have these maintenance charges. Just to see how it looks. And finally, the balance sheet. As on 31st December 1993. Okay. Now just remember, please remember one thing, we are doing the accounts just for 1 year. We are doing the account just for 1 year. That means how it is just 1 year, because we have paid the installments in quarters. We have not paid yearly installments. We have paid for quarterly installments. So we just have to prepare the accounts just for 1 year. Okay. So let's start. The first thing is, at the time of signing the agreement, we record the purchase. So what is the purchase here? What's the entry? We are doing it in the books of RK Industries. That's a hire purchaser. So the entry is asset account debit to hire vendors account. Here the asset is machinery account, and who's the hire vendor? A Limited. So it will be machinery account debit to A Limited account on 1st January 1993. 1st January 1993, machinery account to A Limited account. And how much is the amount? How much did we pay? The cash price, always by the cash price. Cash price is 70,000. 70,000. Okay. So if you are saying machinery account, in A Limited account, it will be 1st January 1990. By machinery account 70,000. Okay, so that's our first entry. The next entry would be for down payment, but in this problem we have realized that there is no down payment. Okay, there is no down payment, so we directly move to the installment. There is no down payment. There is no nothing. There is no down payment made. So we directly move to the installment. Now, when is the first installment paid? 31st March 1993. So what is the once the installment paid? Once we start paying the installments, what's the first entry? We show the entry for interest due. Okay, the entry for interest due. Now, what's the entry for interest due? Interest account debit. Interest account debit to A limited account, or interest account debit to higher vendors account. So here it's A limited account. So in A limited you will have it as 31st March. Please be careful of the date. It's not 31st December, 31st March 1993. By interest account. And how much is the interest? 2000. The interest here is 2100. So if you say buy interest account 2100 in A limited, in interest account it will be on the same date, 31st March 1993, it will be to A limited account. Okay. To A limited account. How much is the interest? We just posted the interest. It's 2001. Okay. Right. Now, similar to interest, we have shown another expense. Along with the interest, we have shown another expense. That expense is maintenance charge. Okay. So, since I have opened a maintenance charge account, I'm going to pass an entry. Interest is also an expense. Maintenance charge is also an expense. And who is it due to? Maintenance charge is also due to the higher vendor. So, how we pass the interest account? Interest account debit to higher vendor, interest account debit to A limited. I'm going to pass a similar entry for maintenance charge account debit to A limited. So, in A limited, on the same day, I'm going to have by maintenance charge. By maintenance charge, it is 500. And in maintenance charge, it's going to be the same thing. To A limit. Okay, how I'm treating it, how I'm treating maintenance charge exactly like how I'm treating interest. Okay, why we are doing this? Because we are showing it as part of the installment. We are showing maintenance charge as part of the installment. So we need to show this, otherwise it won't tally. Okay, and finally we've shown the interest, we've shown the maintenance charge. Next is the payment of installment. What's the entry for payment of installment? Higher vendors account debit to bank. So here the higher vendor is A limited and the installment is paid again 31st March 1993 to bank. In this problem we didn't have the down payment, so installment is the first one. To bank, how much is the first installment? 12,600. 12,600. To bank, A limited, to bank 12,600. Okay, so we have done, we've shown the interest due, maintenance charges due, and finally we have paid the installment. Now the next thing that we would have done would be the closing by transferring the interest to the profit and loss account, transferring the maintenance charge to the profit and loss account. Can we do this at this date? Can we do this at this date? Yes or no? Can we do this at this date? Quick. Can we do this? Can we transfer the interest to the profit and loss account? Can we transfer the interest to the profit and loss account? Normally when it would be transferred is, normally you would close it at the end of the year. Basically transferring it to the profit and loss account signifies that you are closing it, closing the interest account, taking the total interest and transferring the profit and loss account. But we are not going to do it here because we have still not reached the end of the year. So that entry normally happens only at the end of the year when you're transferring the entire interest in the interest account to the profit and loss account. So please don't close it. I'm not going to close this account. I'm going to only go to 31st December, pass everything till 31st December, and only on 31st December I'm going to close the account. So directly now we can move to our second installment. We can directly move to our second installment, which is 30th June. So what did we do in the first installment? We showed the interest, we showed the maintenance charge, and we paid the installment. Same thing is going to happen in the second installment. Show the interest first. How is the interest entry passed? Interest account debit to A Limited. So in A Limited, you will have it on 30th June 1993 by interest account. How much is the interest in the second one? 1,800. Similarly, in the interest account, 30th June 1993 to A Limited account, 1,800. Similarly, pass an entry for maintenance charge. We have said by maintenance charge again on 30th June 1993 by maintenance charge remains the same 500, and in maintenance charge you will have it as to A limit. I didn't put the maintenance charge amount here. Just 5. There's no need of closing because closing happens only at the end of the year once. Okay, so we are done with the, and now we have to do, once we show this as outstanding, we also have to show the payment of installment A Limited to higher vendors. So it's going to be on 30th June 1993 to bank. And how much is the installment? 17,300. 17,000. Okay. We still can't close because we have still not reached the end of the year. So we have done the first two quarters. We have done the first two quarterly installments. Next we move on to the third one on 30th September. Same thing we do all over again. 30th September 1993. Just to save time, I just copy the same thing because it's the same thing. Interest is how much? Interest is 1350, maintenance charges 500. 1350, maintenance charges are 500. Similarly, in the interest account, 30th September 1993, interest is 1350, and here maintenance charges on 30th September 1993. Again it is 500. Okay. Then we go and pay the installment. We have the third installment on 30th September to bank. How much is the third installment? Third installment is 21,850. 21,850. Okay. So we have done the third quarter, and finally we move on to the last quarter, that is as of 31st December. 31st December 1993. Same thing again, by interest and by maintenance charge. Interest on 31st December is 750. Maintenance charge is the same, 500. Same thing, go and post in the interest account. 31st December 1993 to a limited account. The interest 750. Similarly, 31st December 1993 to a limited account 5. Okay, so and then we also have to show the installment that's paid on 31st December. To bank. Final one that's paid is 26 to 50. 26 to 5. Okay. Now we have reached 31st December 1993. Okay. Before closing, we have to pass another entry. What is that entry? Before closing, we have to pass another entry. What will that entry be? Can anyone tell me? Yes, very good. Depreciation. So depreciation will come in the asset account. So on 31st December 1993, we are going to have here by depreciation. And how much is the depreciation? We have already calculated, it is 14. So now we can close close the account, since we are used to closing it from here, from the last one. We'll just do it the same way. So on 31st December, where does this entire balance go? Where does this entire balance go of the maintenance? These are expenses. Where does it go? Where will we transfer it? Where will we transfer it? By P and L account. Okay. And how much is the total maintenance charge? 2000. Total maintenance is 2000. Okay. Similarly, total your interest, transfer the whole thing. The total of the interest account is 6000. We already have it also on top. 6000. And again, the total interest goes to the profit and loss account. By P and L. Amount is 6000. Close this. If you check this account, like I said, always the higher vendor's account should always tally. Okay, if you check the account, it will tally. If you put all these totals together, it will actually tally. Okay, so I'm not going to do it. You can check for yourself, and the total here will be 78,000. You can check for yourself. Like I said, why it tallies? Because there's nothing else that has to be paid to him. It's all cleared. So the higher vendor's account in the books of the higher purchaser will always tally. 78,000, and here we will have a balance carried down by balance carried down will be 70,000 minus 14,000 is 56,000. So here you have 70 and here you have 70. Now they told us to also show they've also told us to show an abstract of the balance sheet. So how we have to show it in the balance sheet? Very simple. Go to the balance sheet. show it as machinery. Machinery, how much is the value? 70,000 less depreciation. We have already calculated depreciation. It is 14,000. This is how you show it in the balance sheet. Okay. Now, what would have happened is, say, suppose we were calculating an yearly, just say, suppose we were calculating an yearly depreciation. I'll just explain a little of the written down value method here. What would have happened, say, this was our first year, this was our first year ending. Just say, I'm just assuming, just to show you how the depreciation would work. Say, this was our first year ending. How the written down value works is, say, the first year here, it was 14,000. Okay. When you're calculating for the second year, it would not be 70,000 into 20%, it would be 70,000 minus the previous year's depreciation. 70,000 minus the previous year's depreciation, assuming it was 40,000, would be 56,000 into 20%. Okay, it would be 50. It's a written down value. What is the meaning of written down value? You minus each year's depreciation and the value that remains, on that you calculate the current year's depreciation. Original cost, it's different. Original cost, you calculate whichever it is, you always calculate on the original price. But written down value, you minus the previous year's depreciation, check what's the current value, calculate on it. So third year would be, you get 56 here, 56 minus the depreciation you get here, whatever it is, into 20%. Okay, so that I will do that problem in detail wherever where written down value is shown from year to year. Okay, here we can't show it because we are just doing it for 1 year. Any questions? Any questions? I know in the beginning it's maybe a little confusing, but this confusion can be slowly eradicated if you all are first of all well versed with the entries. That's one thing. That's one thing that is in your hands that you need to learn well. Second thing is, try and many times what I've noticed among students is you'll always want a set of rules, set of steps. Okay, set of steps is a good thing, but at the same time you need to understand. Okay, don't always say this has to be put here, this has to be put here, and the table is done. No, try to understand. That's if you can understand well, no, you will be able to tackle any problem. So that's why I always try to break things down so that you understand. Otherwise, I'll just tell you do this, do this, do this. I don't want to teach it that way. I want you to understand, and please try and learn it that way. If you try and understand, you'll never get confused. Okay. Now, questions with regard to the problem? Any questions with regard to the problem? Remember one thing, we just have 1 year here, so closing happens only once. The closing happens only once. Okay, please don't close after every quarter because that's not how it works. The closing happens only once. Any questions?